You're watching us here on Halftime Report. I'm Manglam Malu. With me, as always, Ekta Batra. Looking good for the markets. In fact, triple-digit gains coming in for the Nifty. Virtually at the high point of trade, we opened well. And unlike the previous few trading sessions where the high was sold into, today that's not been the case. The markets moved from strength to strength. The biggest reason for that, it's running on both its legs. The Nifty Bank, which has been outperforming, continues to outperform. And the second part is the IT index, which is now also providing a fresh bit of support for the market itself. So you have the Nifty IT and the Nifty Bank put together, taking the Nifty higher.
Hi, Manglam. Yes, absolutely. And, a lot of the global macros continue to be in focus. Yes, it is Thanksgiving holiday in the US, so we do not have any cues coming in from the US today, as well as likely tomorrow, considering that even Friday is going to be trade only up till 1 p.m. But interestingly, just want to point out that it's been a week where there have been central banks which have hiked rates. So we did speak about how New Zealand, in fact, hiked rates by 75 basis points. And today we had South Korea, which hiked rates by 25 basis points. Why does this gain importance? It's simply because they've opted for a smaller rate hike. That possibly ties in with what the Fed minutes said as well, which is indicating a slower pace of hikes going forward. So that's just important to keep in mind in terms of the larger context, in terms of what's taking place on the global macros. A lot of stocks in focus back home. Tata Consumer, obviously, Manglam has been talking about it, and drinking probably a lot of water to keep your voice going. But nonetheless, Apollo Hospitals, IOL Chemicals, PB Fintech, all of these stocks which are in focus and buzzing around in today's trading session. Look at PB Fintech, in fact, at the high point of the day, up around 10-odd%. And we do have a statement, in fact, which is coming in from Tata Consumer, where the company says that management is in discussions with various parties, and that includes distilleries. So that's an important piece of news which is coming on your screen. Any additions on Manglam which you'd want to add?
On Tata Consumer, well,
that's a fresh statement coming in.
This was absolutely not unexpected, because every time we had been in touch with the Tata Group since morning itself, I've been working the phones, etc., they said that they are always exploring various opportunities. And like the management, himself, Mr. Sunil D'Souza, said to us, when we asked him about this, he said that by nature, we are looking at acquisitions, especially in the liquid
and Tata always has some opportunity on their table all the time.
Because anything that happens in the M&A space in the country will eventually land up on the Tata side. What I'll be eyeing, however, is that, when the closure of this deal happens and whether it happens at the numbers that have been reported so far itself. So far, no, directional views coming in from Tata's, but the important positive is that there is obviously not an outright denial. So from a Tata standpoint, there is no outright denial. They are always acquisitive, and we did speak to, the Distillery management. He said that he's in talks with Tata. So there is a seller, there is a potential buyer. I mean, what do they say in Hindi? Jab Miyan Biwi Razi.
Okay, well, the amount also should be correct then, but nonetheless, and the stars should align. So that is on Tata Consumer Products. That stock is up around 2-odd%. That's the official statement which is hitting the exchanges and on your screen. But let's get talking to our first corporate on the show. KPIT Technologies is the first company that we're showcasing today. The company has been selected by Renault Group as a strategic software scaling partner for next generation software defined vehicle programs. To discuss more on the deal as well as the growth outlook, we have Kishore Patil, the co-founder and the MD and CEO of KPIT, joining in now this morning. Mr. Patil, hi, thank you very much for joining in. Just wanted to first understand the size of this particular deal as well as the duration.
Yeah. So good morning to you. Let me give a little bit of a background so you get a bit of more color to it. See, as we have been saying that most of the automotive companies are transforming into the new set of architecture for the vehicles, and most of them will transform into all the what you call the new features, electrified for sure, autonomous for sure, and but more importantly with the new architecture which will allow them to really sell more services on the back of their vehicles to their consumers. So now Renault has taken that step, and they have reorganized their business. And one of them is what they will come with the Ampere, which is a software-defined vehicle platform or a separate company, which has some other investors like Qualcomm also. So while they are while they are going on this journey, I think they were looking for different partners, and one of the important part is, of course, the software partner for building an platform as well as the integration of this through the production cycle. So that's where KPIT comes in place. And it is our estimate that about 600 plus engineers will be deployed on this. The production program is in 2026. So as we start from now, this program will continue till through 2026. So that's how it looks like. Typically, 600 plus people we will scale by Q2 of the next year for us. And roughly, we cannot exactly say, but this will be a 3-digit deal for us. That's how we see it.
3-digit deal. And, just wanted to understand the progression. Hyundai and Renault were disclosed as key clients for Technica. You acquired Technica, of course, in September. So is this a natural progression of that acquisition? What was Renault as a client, of Technica and now hence a client of KPIT? Does that work like that?
It is, we were in talks earlier. We were engaged with Renault earlier, but certainly Technica brings certain special, expertise to KPIT, which allows us to, reconfirm our leadership and also provide more opportunities to engage. So certainly that's a part of.
Okay, so have you increased your offering to Renault? For example, are you cross-selling and hence getting a larger amount of revenue from that particular client?
Absolutely. This is if you can look at we go into the details of the announcement. Basically, talks about it is all across. It is across the domain. It includes the middleware part, operating system. So it's a absolutely full encompassing deal, which is required for bringing a new generation car.
So, if you could, give us a sense of how big the cross-selling opportunities could be. Say, for instance, Technica did 100 crore for Renault. With Technica being with you and KPIT additionally, could that go to, say, 115, 120, 130 odd crores? Just the quantum of cross-selling.
No, we will not be in a position to do that, and it is too early first. And the second thing is the way we go about acquisitions is we integrate them very quickly, offerings. So we work more as a one team. So I think it's very hard to do that. But naturally, we will cross-sell these services to almost every client KPIT has, and naturally all the KPIT services we will sell to all the clients which Technica has, which are a part of T25. So our strategy is very clear about T25, and basically it is going deeper as well as wider. So I think from that perspective, we'll absolutely cross-sell and go deeper.
Okay, all right. So it seems as though acquisitions is the big theme today. We were just discussing Tata Consumer and the potential acquisition of Bisleri and Technica on your end. Anything more in the pipeline when it comes to inorganic initiatives? How much do you have set aside in terms of cash or debt in order to probably grow inorganically?
I think we are not having any targets for any inorganic thing, and I think we have enough on plates. I think we did some very high quality acquisitions in last year also. So we would now, our focus is basically to drive and accelerate inorganic organic growth through the services or offerings which we have got through these acquisitions. And KPIT itself has the largest offering and very broad offering. So as we see, we are in a very, very prime position to do the SDV deals. So last time I mentioned to you that 5 out of 7 engagements which are going on, KPIT is engaged. Now it is 6 out of 8. So I think we have a fair share of our business, and that will continue. So I think we are not necessarily looking at any acquisitions.
We hear, can we hear from you on Hyundai? I mean, that was another important client of Technica. You got to know.
It's a See, client-wise, we will not be in a position
Okay.
to talk about it, and this is, these are not necessarily very our basic strategy. We do all the disclosures as soon as it happens. It is all about the T25 clients. Wherever we go to the clients, then we make the announcement. So I think you will hear when it comes. I think there is nothing specific about it. See, when people talk about the client list, it is even some engagements, etc. They are covered. So it is not necessary that we go after it. So,
okay. So just leave us with a broader sense in terms of the deal pipeline, because there are some headwinds which are emerging within the entire IT space in the US. But particularly for KPIT, you have a guidance of around 23% in terms of revenue growth, margins of 18.5% to 19%. Are you maintaining that? And can you just throw some color in terms of what the deal pipeline and demand might be looking like? Any headwinds there?
Absolutely. I think last time I mentioned that it is the strongest pipeline we have. And I also mentioned that time that there will be 2 mega deals, which are also as a part of the pipeline. It doesn't mean that we can close everything. But the good part is the generally concern, and rightly so, is in this economic environment, how and specifically in Europe or how this kind of a deals can materialize. What this actually brings out is 2 things. One is specifically automotive clients have prioritized their spending into software-defined vehicle, which is very critical to them. So basically, that is a point number 1, and that is they are not compromising on that. They are cutting the cost somewhere else, but they are maintaining their spend, and that is one. And KPIT is really in a prime position because if you look at it, we were not working with Renault earlier. So in a T25, this is an addition. So bringing a significant engagement to a new client, that basically reiterates what we have been talking about, the environment and KPIT position.
Okay, all right. So we're going to leave it on that note. It's been a pleasure. Thank you very much for joining in and speaking with us. So that is definitely an opportunity where there is a new deal which is won by KPIT Technologies from Hyundai. And that, yes, automotive companies are probably rearranging their spend, looking at technology in terms of a spend and probably curtailing it somewhere else. So that's the word coming in on KPIT Technologies. We need to take a short break, but on the other side of this break, Mohan Joshi of Steel Strips Wheels will join in to discuss the recent memorandum of understanding which they've signed with Redler Technologies. Stay tuned. Welcome back. Well, it is definitely positive for the markets. It's a rub-off from the Fed minutes and what took place in Asia, and that's probably seeping into the Indian markets at this point. So we have the Bank Nifty, and the momentum in terms of the financials, in fact, continues. The Bank Nifty is, in fact, just about at around 43,000. As you can see, it was sitting at a record close in yesterday's trading session, and it seems to probably be the star in today's trading session as well. Remember, it is expiry, so we will watch out for what takes place, especially in the second half. But let's talk about a couple of other companies. Steel Strip Wheels has entered into a memorandum of understanding with an Israel-based company, Redler Technologies, for developing, manufacturing and selling EV controllers. To discuss more on this, we have Mohan Joshi, the head corporate strategy and investments at the company, joining in now. Mr. Joshi, hi, welcome to the show. If you could just detail for us what this technology tie-up means, or the tie-up with Redler means, and how would it contribute to your P&L and by when?
Hi, thanks a lot for having me. So we announced that it is an MOU towards a joint venture of 51-49, where SSW will hold 51% and Redler Technologies will hold 49%. It is for designing and manufacturing of the EV controllers with IoT-based applications. And I think that going forward, as we see, this opportunity will scale up to the tune of $700 to $800 million opportunity in the next 3 to 5 years. And with the advanced technology access with Redler, we feel that we will have this first mover advantage in the country to completely localize it and offer these offerings to all the EV-based OEMs which are trying to run for transformation from the typical fossil fuel-based vehicles to EV segment.
All right. And how big do you think this opportunity can be for you? Because, this is a new category that you've entered. You've been talking about, this partnership for a while. We've spoken to you about, you looking for a partner and all of that. You said it'll happen soon. Now that it has happened, can you tell us the potential business opportunity here for you in terms of annual additional revenues?
I think the industry size can be between 600 to 700 million dollars in next coming 3 years, with the pace of transformation which is underway right now. And as we speak, that we are fairly confident that we are going to be grabbing a minimum of 25% market share, and targeting that this 25% will continue to move up towards become the largest player in the industry. As I said, that we are the first one to get this homegrown, best-in-class IoT-based controller, and we'll have a fair bit of first mover advantage in this segment. And also to add this, that this product is a PLI-based product, and we feel that we are fairly confident that in the next financial year, you will see the mass production coming in. And the first year will always be, in terms of testing and trial and, giving sampling and demos. And 23-24 year will be the year of changing and stopping the imports to the tune of maximum possible capability of SSWL, and offer the benefits of this product to all the OEMs which are present in the country.
Okay, so what do you think this would eventually do to your margins, considering that your cost of manufacturing would probably reduce?
So what I feel that this is a technical product. It's a very technology-driven product. So we feel that the margins are in double digits, and given that it's scalable, and I think it'll also need a very less amount of capex. So we feel that going forward in next 2 to 3 years, when it becomes close to $100 million business or $150 million business, it will contribute accretively towards the EPS as well as to the margin profile of the company.
All right, let's talk about the other parts of your business. I remember you had scaled down your export guidance for this year to around 450 odd crores, this from 600 to 650 odd crores, given weakness in the global markets. Where does that stand now? I mean, what can we expect in the remainder of this year for your other businesses?
I think as we guided that for the full business, we are at close to 4,000 to 4,100 odd crores in terms of the top line. In terms of the EBITDA levels, I think we clearly stated 450 crores plus with a 5% upside guidance on the EBITDA. And as we speak, export market still remains subdued. And we are fairly confident that this nature of subdued demand will take an uptick coming into the Q4 of this financial year. And next financial year, we'll have exports of alloy as well as exports of steel wheels back to the vengeance. And we are fairly confident that we'll achieve the financial year 21-22 export numbers in financial year 23-24.
Quickly, just on the export figure, I think your earlier guidance was 600 to 650 crores in FY23. Are you in line to achieve that, or do you think that it could probably be lower?
So I think with the last conversation that we did, we already downgraded that number to the tune of 450 odd crores from the 650 odd crores. And we also stated that in Q4, the revival will start. And we also are confirming that, this number will go back to the numbers of financial year 21-22 in financial year 23-24.
Okay. All right. We're going to leave it on that note. Mr. Joshi, thanks very much for joining in and speaking with us. So that's on that's on an MOU that they've signed with an Israeli company. The opportunity size is likely to be quite significant. Let's see if that comes through or not. The stock down around 0.7%. Need to take a break now. But up next, Pradesh Mehta of Yes Securities will join in with some trading strategies and the technical outlook on expiry day.
Welcome back. Looking extremely good for the market, moving towards that 18,400 mark for the indices. So let's take a look at what's taking place in the F&O space, more so because it is November series expiry today, and we the street was hoping for a decline after that 18,350 opening, but that hasn't been the case. So as a result of which, the bulls are extremely active. We've seen a lot of writing at the 18,300 put as well as the 18,350 put. So both of them seeing a fair amount of writing by the bulls, and that's telling you that, you know, they believe that there could be a fair amount of support at levels closer to 18,250 to 18,300. The erstwhile resistance will now become a support. There you have it, 18,350 put for a premium of around 11 rupees, telling you that there is support between 18,300 to 18,350. The call writers, however, at 18,300 are now getting nervous with the market moving higher, and as a result of which we've seen 74 lakh contracts being unwound already, with 70 lakh still outstanding. So were that to happen, we'd see further up move on in the market itself. And there are some other active calls as well. The 18,350 call that moments ago had around 30 to 40 lakh shares in additional open interest. That's now come down to 7 lakhs, and for a premium of around 40 odd rupees, the shorts out there are feeling the nerves. So that explains why the market's moving higher. And the 18,400 call, that is the other one that I'm looking at as well right now. The bears are still holding on to that level. 85 lakh shares added today, 2 crore shares in total open interest. Were the Nifty to go ahead and cross that 18,400 mark and stay above 18,410 for a bit of a time, all these call writers will have to cover their positions, and that would mean that we would see another burst in the second half of trade itself. So that's as far as the expiry setup is concerned. Whether that ties in with the charts or not, Pritesh Mehta joins in. Pritesh, what do you make of today's trading action, and what's likely to happen in the second half?
Yeah, good afternoon. So basically, the way I see it, when you look at the index heavyweights, the components, your HDFC Twins, they are holding on pretty well. Like ICICI Bank, it is consolidating at the top, along with Axis Bank and L&D. So these are the heavyweights which are holding the markets higher. So I'm not expecting any kind of downside move, at least in the second half. We could in fact attempt to move higher. 18,450 would be my bet for the today's session. And in this kind of setup where select heavyweights are holding ground very well, so decline is going to be short-lived. So I think every decline should be an opportunity to buy in this market.
Okay, all right. And any of the declining stocks that you would be buying?
So right now, rather than we would be chasing the heavyweights. So the way I look at it, HDFC Group stocks have done really well in the last couple of weeks. In fact, so we have created a customized HDFC Group index. Within that, HDFC and HDFC Bank have already made a big move. Now, HDFC Life today is bouncing back from the lows. But if you look into the HDFC AMC counter, this particular stock, after a bullish anchor column on quantitative figure chart, has given a double top buy also, a triple top buy also. So we can see a 10% move coming in. And second recommendation is buy on L&T. Whether we look at the Nifty Infra Index or standalone chart of L&T, this stock has given a triple top buy now. We can see further upside in this counter. A rally towards 2 to 5 is expected.
All right, Pritesh, thanks a lot for joining in and giving us your views on the individual stocks as well as indices. With that, we'll slip into a short break with a lot of strength in the market. As we do that, here's a quick programming note for you. To fully commit to the cause of bridging the gender parity gap in the workforce, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative. It's called Future Female Forward, the Women's Collective. It's presented by HSBC. The initiative will be officially launched through an exclusive on-ground event on Friday, which is November 25th, tomorrow, in the presence of Shireen Bhan, who's the managing editor of CNBC-TV18, Mr. Hitendra Dave of HSBC, and other women leaders of India Inc. Also in attendance will be some of the most influential voices from the business, entrepreneurship, and entertainment spaces. Don't forget to tune in to CNBC TV18 on Friday. That's tomorrow, November 25th, 5:30 p.m. onwards.
Welcome back. Well, there is definitely a lot of momentum in the financials. Like we've been pointing out, the bank Nifty is up around 0.5%, but just watch out for a couple of other counters. For example, the listed Bikaji, which listed last week itself, that stock is up around 10% at this point. It's done fabulously well this week. It's gained around 19% on a week-to-date basis already. And remember, it listed at the same time as Medanta.
Over the last couple of trading sessions, yesterday as well, it was locked in a 10% upper circuit. As we speak, it's trading at a premium multiple of 73, 74 times FY24 earnings. So, it's been a big mover, but also an unusual mover because when it was in the markets, it was at premium valuations. and thereafter it's only gotten more and more expensive. At 73 times, it's actually probably one of the most expensive FMCG companies, even if you compare it to the likes of Nestle as well as Britannia, which are big listed food players.
Absolutely. And, it probably just compares to the stories of the likes of Jubilant Foodworks and, the kind of valuations which that particular counter also used to probably trade at. But nonetheless, that's on BKG. But the other one, which is actually buzzing quite significantly today and the entire week, has been Indico Remedies. So that stock is up around 6.5% at this point. It's gained around 12.5% on a week-to-date basis, 16% this month itself. So they did hold a management meet. They're quite confident in terms of the US business getting some injectables and eye drug approvals in the next couple of quarters. So maybe the street likes that and is rewarding that particular counter at over 400 odd rupees. But nonetheless, Fino Payments Bank is also surging in trade today as Capri Global Holdings has bought shares of the company. Vivek Iyer is standing here, tracking the fund action as always, and giving us more details.
Well, that's right. So this particular name, yesterday you saw very sharp up move. The stock was perched at the 20% upper limit, and a little over 1.2% equity is what KP Global Holdings actually bought. And this particular, purchase was done closer to the upper end of the price band. Very interesting deal, and at interesting price as well. So today we had the management of Fino Payments Bank, and what they had to say, they actually clarified at this point of time, there wasn't any strategic nature for this particular deal. It appears to be more of an investment from the point of view of KP Global. However, what they did say is that, they are open to more such partnerships. So they're looking at this more as a partnership. They're saying that there's no competition, especially with KP Global in terms of, the areas that they operate in. And what they're saying is that there can be synergies with KP Global going forward. And, that was the key takeaway on the back of that particular interesting block deal and, management commentary. The stock continues to outperform in today's trading session.
Take that point. Thanks a lot for that, Vivek. PB Fintech is the other one which is buzzing in trade after regulator IRDAI has released a revised consultation paper on expenses of management. Surbi joins in to tell us more. Surbi.
PB Fintech is buzzing in today's trading sessions with huge volumes. This is because 1.6% equity changed hands earlier today. More importantly, IRDAI has released a revised consultation paper on expense of management and commissions. According to this, the regulator has done away with the specific cap on the commissions to agents and intermediaries that it had earlier proposed in August. Instead, it has suggested that the commissions paid by the insurance companies, both life and non-life, should not exceed the expense of management. Proposed expense of management limit is 30% of gross premiums for life insurance companies and 35% of gross premiums for standalone health insurance companies. This may come into force in April 2023. This is a big positive for PB Fintech as it substantially reduces the regulatory risk for commission rates.
All right, just keep an eye on a couple of stocks. We have Titan, which has moved to the low point of trade. Tech Mahindra continues to do well, so the IT index continues to do well. And HDFC Bank is doing extremely well as well. We're at the low point of trade. Easy Trip to consider proposal of acquisition on December 1. We're just trying to figure out what acquisition this is because day before yesterday itself, we had the management of Easy Trip Planners join us here on CNBC-TV18 say that they were open to acquisitions in the cab aggregator, bus aggregator, as well as hotel aggregator space. And that would propel their business going forward. If you just take a look at the way the stock has moved in the last 3 trading sessions, ever since it went ex-bonus, some would know that something is up with this counter. So we'll keep an eye out on this one. And as we do that, let's also slip into a short break.
Yes, absolutely. Just want to point out that it's been a huge outperformer. The 52-week low, Mangalam, was a year back around December, and that was at around 30 odd rupees. And look at the way that stock has moved all the way to around 72 odd rupees, fresh 52-week high in today's trading session as well. We need to take a short break. We'll get you more on the markets and stocks once we're back.
Back, you're watching us here on Halftime Report. The market continues its march forward, but it's also a good time to get in some important opinion. We do have, the Chief Economic Advisor in conversation. Let's hear him out.
On the first 2 charts on your left, At the same time, while certainly the inflation rate has been trending, appears to have peaked in many countries, US, also maybe in the Eurozone, etc. The important thing to remember is that to the extent that economic slowdown is not going to be as acute as was anticipated earlier, and to the extent that financial conditions remain looser or less tighter than anticipated, because asset markets, particularly stock markets, are quite resilient, to that extent, and you can look at the National Financial Conditions Index in the US, to that extent, there is going to be a greater risk of monetary policy tightening or a greater, longer stickiness in global inflation rates. But one silver lining for India will be, if monetary policy tightening runs longer than what central banks are anticipating, it would definitely keep commodity prices dampened in the course of 2023, particularly crude oil prices. It is in fact comforting that crude oil price has been well behaved in the last 2 or 3 months, despite the risk of oil price cap coming up in December, and therefore one would have expected the market to price in increased supply uncertainty. But the recent thawing of relations between Eurozone and the US on the one hand and Saudi Arabia on the other is also prompting speculation about OPEC going back on the 2 million barrels per day cut in production that they announced a month or so ago. So in a way, at the moment, there is a certain uneasy truce or pause in the global uncertainty, which is good news. But we cannot rule out the possibility of the current tightening cycle, even if it is slower in terms of the magnitude or the pace, lasting longer than we have anticipated, simply because financial markets refuse to roll over.
Okay, so that's the Chief Economic Advisor talking at the SBI conclave. We'll get back to more details and the key highlights will be flashing on your screen as well. But nonetheless, let's move over to a couple of sectors which are buzzing. Sugar companies are buzzing in trade today. Surbi is here to tell us about the possibility of an extension when it comes to exports. Surbi, go ahead.
Sugar companies are buzzing in trade today, and this is because Indian Sugar Mills Association said that India is likely to extend the limit of sugar exports by 2 to 4 million tons in this sugar season. This move will leave a total exports of 8 to 9 million tons. The government earlier this month had already approved the first tranche of exports of 6 million tons. India is likely to produce 36 million tons of sugar and 5 million tons of ethanol. Consumption is around 27 million tons, and balance will be for exports. Mills have already signed contracts to export 4 million tons of sugar. Additionally, the wedding season sugar demand is higher by 10 to 15% this sugar season compared to the previous one. All of this is helping the sugar companies.
All right, thanks a lot for that. Talk about sugar, and on the other side we will get Manisha Gupta joining in with David Lennox. In fact, they will be discussing a lot of commodities. All of this as the equity market continues.
Welcome back. Let's talk about crude prices now, where we have seen yet another 4% decline overnight. And with that, in the month of November, from its highs, we're down by nearly 12 to 14% for both the crude varieties. Joining us to decode that is David Lennox. He's analyst at Fat Profits. David, hi. What a volatile month this has begun with, nearly 3 to 5% of a movement becoming a norm on a daily basis. But I do want to start with what the G7 statements seem to be coming in as, with the cap price at around $65 to $67 per barrel is slightly higher than what the Russian Ural is trading at. In any case, how are you reading the price cap itself, and do you think by the time we see it coming in on 5th of December, it already would be a non-event?
Look, certainly we'd have to wait and just see what happens when that cap comes into play. We haven't really seen anything like this for some period of time, so one would suggest that the markets are going to be a little bit anxious about what is going to happen, and we will probably start to see the prices ease further back as the time approaches for the cap to be put into place. So we do expect that they will certainly follow through with that cap. And then it's going to be a matter of react or how the markets will react, because, as I said, we've not really seen this sort of activity before.
Oh, well, absolutely. And the other thing clearly is about China. We have been tackling those demand concerns for some time now, and especially now with the Chinese COVID cases rising with record highs, nearly 30,000 per day cases. How soon before you see the China story start to pick up in sense of demand?
Well, look, it's certainly difficult to determine, but one thing does have to happen, and China does have to look at its zero COVID policy and determine a better way to handle that particular pandemic. Perhaps not quite the same way as the Western countries have handled it, but they do need to go and certainly put more effort into vaccinating their population. Once that happens, then one could start to suggest that we will see a better picture of China perhaps opening. But at this point in time, one would suggest that that's still going to be some ways off, and we're going to see the disruptions as cities and localities and go into and come out of lockdowns. It's going to be a way of life that we're getting quite used to, but it is very, very disruptive, and of course it will have quite a considerable negative impact on the oil price.
You know, David, going forward, when you look at 4th of December and 5th of December, you have the OPEC meeting, you have the cap price from G7 coming in. We also have the European Union talking about a ban on Russian exports. Of all these three events, which one would you watch more keenly?
I think all of them, because they'll all sort of fall at about the same time. So one's going to suggest that the market's going to get very, very anxious about the events happening, and that's going to again put some pressure on the oil side to the down. On the oil price to the downside, and really it could be quite a difficult period. If the market does get a strong whiff of uncertainty in any of those events, then we could see quite a significant fall in the oil price. That's started to happen already. Throw in, as we've just talked about, the China situation and COVID, and we could see the oil price, and we've been quite a bull for the oil price. We could see quite a weakening in the oil price in the month ahead.
So what kind of a decline in prices are you anticipating from here on? I mean, as you said, we've seen already quite a sharp down decline there from $98 of a high in the month of November itself to below $85 is almost a $15 of a decline from November highs. Where do you see supports coming in?
Oh, look, we could probably certainly see another $15 downside. It really does depend just on how all those events are handled by the market. And if they're not handled well, and one would expect that that's going to be the case, then we could see certainly another $15 to $20 shed from the oil price. Yes, that's getting to quite exceptional lows, but we don't think it's going to stay there for very long, because if you have a look longer term, that we believe the prognosis for oil was quite weak longer term. But certainly we've started to see events happening that would suggest that it's going to continue to remain mainstream for some time longer than we anticipated. That should put some support under the prices. But in the near term, watch out for those events.
All right, so another $15 down from here would mean $70 for the Brent prices. I mean, that's quite a bearish view coming in there. But David, a word on natural gas as well, with the winters now starting, and it seems like a strong start to the winter in West. What is the kind of demand that we're looking at? Would the kind of inventories that Europe has summed up enough?
Look, we certainly think that Europe has probably at least got inventories to suffice through the winter, but that is going to be a bit of a touch and go, because again, we've not really seen this sort of situation before where they've had to go and build up inventories. Generally, all they've done is switched on a pipe and away in comes the gas, but that's not going to be the case. That could leave the markets quite short when we come into the southern winter in the second half of next year. And fortunately, there's not significant demand in the bottom part of the world as there is in the top, but it could start to put some pressure on the inventory levels and natural gas as Europe starts to work its way through all those inventories. It's going to be the replacement of them that's going to be important, so that could see natural gas prices really stay quite high for some time, and maybe especially into the second half of next year. It really does depend on just how far they go with the cap and how Russia reacts to the cap, and basically if we can see some completion to the war or some primary perhaps peace, the whole situation could change quite quickly.
Clearly, a lot of uncertainty out in the market, but clearly the crude oil prices can slip some more, but not natural gas, especially with the winters and the kind of demand that is rather anticipated. David, as always, thank you so much for joining us with that clarity on what to expect from the energy sector. But with that, it's a wrap on Halftime Report. Business Lunch takes all the action forward.